Welcome into the Moving to Norfolk podcast. This is your market recap where we're going to be discussing weekend trends and also talking about January 2025 insights. Now, in today's episode, we're going to be recapping real estate news that's going to matter to you. And then we're going to also break down some of the local real estate news that you want to pay attention to, highlight a very special neighborhood that's actually seen a lot of momentum in the last 30 days. And we're going to answer one of your specific questions that you have for us today. So lock in, stay tuned, and we're going to get into everything that's going on. Now, before we get started, if you're looking to buy, sell, relocate, or even invest in the local Hampton Roads real estate market, definitely feel free to use our link down below where you can either email us, give us a call, or even set up your own property search by using our website link down below. Let's get into the video. Let's start talking about how active listings are going to be climbing at the end of 2024 and maybe even rising even more in 2025. Now, active listings on the market has seen inventory tremendously increase, and we're going to talk about it here with rising with Housing Wire, as they put out an article talking about it as well too. As they say, lingering homes on the market are causing a domino effect on active listings and housing supply. Now, according to Redfin, they revealed that active listings climbed about 12% year over year to about 954,703 listings during the last 4 weeks ending December 22. Now, though that is the smallest increase since March, they say. Now, pending homes sits about 58,000 nationally for the last same period of time, marking a year over year change of negative 3.4%, which is the first drop in the last 3 months, according to Redfin's data. Now, new listings were unchanged at 54,077, which means that they're sitting at about a month of supply at around 4 months, which is up 0.6 points year over year. Redfin considers 4 to 5 months of supply as balanced inventory, and that's meaning that it's ideal in sellers' market conditions. Okay, now, one of the things that I like to talk about with local real estate market as well too is I'm going to bring that up for you, is that when we're talking about housing inventory, like Redfin suggested, 4 to 5 months is a balanced inventory. Now, beginning to 6 months, you start to go into a buyer's market, and that is something significantly to pay attention to. Now, if you're relocating to the area of Hampton Roads, you may not be aware that we have 7 different local markets. Okay, so we actually have Norfolk, which that's what this channel is based off of, because I was in the military, and we basically, most of the military is assigned to the Norfolk Naval Station, which is the largest naval station in the United States. So now you have Norfolk, Virginia Beach, Chesapeake, Suffolk, Portsmouth. That's all on the south side. And then you actually have Hampton and Newport News, and we even service the Williamsburg area that's a little bit further than Newport News as well too. So York County, Pequosen, all those areas fall in there, but the 7 major cities are the ones that I named. Now, so that means that we have to talk about what inventory levels look like, but I just wanted to share with you the stats that we actually have for the local market at the end of November for us as well. You'll see that I just want to talk about housing active inventory right now. We have about 5,400 listings on the market at the end of November, and we sit about 2.8 homes of inventory in the market as well too. Now, why that's important to know, and I'm going to bring that up for you, is that our 2.8 is basically in line with what Redfin is saying about what the balance of a home, a buyer market is, or what we're looking at from a standpoint of what you're looking at from just basically what the inventory looks like. So I want to bring up to you and show you what our active inventory has been looking like for a period of time now, and show you where we're actually going with the months of supply. So here is our months of supply chart as well. Just kind of graph it out to show you exactly what it looks like as it loads. Once it loads, I'll bring it up for you. But realistically, we see it in that point where it's 4 to 6 months. Okay, and so here you'll see where we was at prior to the pandemic. We have always been trending towards coming out of a seller's market. Okay, trending towards the seller market. I was saying. So buyer's market 2008 all the way down right to we get right into the cusp of 2016. We was at 5.6 month of inventory, and that was around April to July. We were sitting around 5.6, 5.5 months of inventory. Now this blue line represents the steady supply, the stable market. 4 to 6 months is what our our MLS usually suggests that we're in a stable market around that time. If you get above that line, we're in the buyer's market. If you're below that line, we're pretty much in the seller's market. Okay, so now we've been since the pandemic below this line, and we have yet to trend back towards that line. And we may be a significant ways away from that still, because what's one of the things that a lot of people are unaware of in our market is that Hampton Roads has a strong military presence, DOD presence, Department of Defense, and we are headquarters for a lot of major brands as well too. So we always have people coming in and out of the markets here, and it's always a stable market because there's always enough inventory. It's not always enough inventory for those people that are moving to the area, and we are really in a, when pandemic just accelerated where we was at with our local market. When we start dropping in that inventory, we've not seen people leave this area, because now, like I did another video that talks about how Virginia has now started to elevate itself in the eyes of veterans who are retiring and thinking about relocating out of the area, to where now it's becoming a more of a retirement destination for military personnel as well too, because of the benefits that Virginia is now offering. So some of this stuff plays into a role where it starts to add up to where people are just not moving. So when you're looking at this article from Housing Wire, they go on to say days on market increased by 6 days year over year to 45 days, indicating a less competitive market nationally. Okay, make sure that you remember that we're talking about this nationally. So that's what we're at nationally when it comes to active inventory. I want to break down some of the things that you need to be paying attention to also on a national brand when it comes to thinking about the real estate market and where we're actually at. And most of this still surrounds inventory, really and truly, is what we're really talking about a lot here. So rising inventory is the most positive housing market story in 2024, according to Housing Wire. They're saying we're now approaching 2019 inventory levels. So, well, let's see. It says the most positive development in the housing market over 2024 has been an increase in active housing inventory, which is approaching the levels seen in 2019. Although those levels in 2019 represent a 5-decade low before COVID-19, the market was still functioning better than it did 2020 to 2023. During the first few years of COVID recovery, there was an unhealthy imbalance with too many buyers competing for too few homes. For example, in March of 2022, there were only 240,000 homes available for sale. Now, as we look ahead to 2025, the market is in a much better position if mortgage rates falls toward 6%, something that wasn't the case before. Now, let's talk about pandemic versus now. Pandemic, it was a madhouse, especially in Virginia. And I mean, I'm pretty sure across the nation. I always tell the story of how we sold our home in San Diego. We got reassigned to Virginia before I retired from the military, to where we put our house on the market right before the pandemic. We actually, we definitely put our house on. I think I was due to transfer April 20th. We went on the market like March 1st. March 1st, we had like 10 people through our house. We didn't even realize what was going on with the pandemic. It was starting to, brew a bit, but it wasn't, crazy just yet. Our house goes under contract. We had multiple offers. We had 4 offers, I want to say, multiple offers, and we wind up getting over $30,000 over list price offer accepted. And wind up, the pandemic happens. California shuts down. We wind up selling the house either way it goes. We couldn't, and then basically we moved to Virginia, and Virginia had now ran into a situation where, relatives wasn't able to show houses at the point in time we moved here because they wasn't classified as essential personnel until, lobbying in Capitol Hill wind up making relatives essential personnel as well, so homes could still be sold in the city. So I say all that to say is that, but though people was lining up like everywhere, like a house goes on the market, it could be 10 to 15 to 30, 40 people out there because of that price point. It just depends on the price point, depends on the status of the house, how many people was going to show up for it. And it wasn't like you can get an assigned time slot for a showing. You had to just wait in line, wait your opportunity to get in, get your 5 to 10 minute reviewing, and then move on. It was so crazy during that time frame that I'm glad that we're not in that time now. Now we're in a time where showings are actually being reserved. Now there are few cases where someone would put a house on the market. It could be $180,000, $195,000 house, and it could be in a city that's in demand. And people are going to show up for it. I mean, and that's what's just going to happen. So, I mean, and you can still wind up in a situation like that, but they are very rare and few occasions that that happens now. So to me, we're in a way better spot than we were before. And I hope we're going to ever go back to that ever again, honestly. So let's look what Housing Wire had to say about inventory data. Okay, so they say that it's the increase in inventory hasn't led to the significant national home price crash that so many had called housing experts had predicted for years. Instead, we are gradually returning to a more normal market and moving away from the savagely unhealthy housing inventory conditions we've seen. Weekly inventory changed from December 20 to 27. Inventory fell from 667,000 to 650,000. Okay, so from 667 to 650,000. Then the same week last year, it was an inventory fell from 528 to 513. So about the same $15,000 to $17,000 home, 15 to 17,000 homes sold in inventory or came off the market in inventory year over year. The all-time inventory bottom was in 2022 at 240,497 homes. Well, we're definitely not at that level no more. The inventory peak for 2024 sat around 739,000 homes, and for some context, active listings for the week in 2015 were 994,000. Okay, so now I think that you have to kind of like look at inventory as a balancing act here too. When it comes to inventory, I don't know if you really recall where a lot of individuals were basically saying, "Oh, market is going to crash. Interest rates are going high. Foreclosures are going to be at all-time high. We're going back to 2008 levels. Interest rates are going to 10%." I don't know if you heard these conversations, but if you have, I feel like that's fool's gold in a lot of places. Now, I will say, like cities like Phoenix, who are dealing with more inventory on the market, homes just sitting, those are areas where that's going to happen at, because remote jobs had led to a situation where you don't necessarily have to be in the same city that you was in before, and that made it to where now you can live where you want to live and still do your job, get paid considerably well, and live a better lifestyle in certain areas as time too. Now, one of the things that I think happened during the pandemic was as well too, that a lot of people don't talk about, is mortgage forbearance. With mortgage forbearance, a lot of people was able to roll the payments that they couldn't make at the time due to the pandemic to the back of their loan. So realistically, these people are still able to maintain their homes. Homeowners are able to still maintain homes. They're probably back working now, still making their payments, so that there's going to be very few foreclosures in the foreclosure market. Now, is there still opportunity in the foreclosure market? Of course it is. There's always going to be an opportunity there, but the percentage that you're seeing in foreclosure now is considerably less than what you will see during the pandemic. And I'll bring that up. Matter of fact, here, let's do that now. Let's bring that up here on the on our local market, just so you can see percentage of distressed units in our market right now. And distressed units will show you that we are literally like basically almost none at this point. So the same period last year, we had about a 2.3% distressed listings, and and this year we're sitting at about 1.7% as the end of November 2024. So that number is still considerably coming down at this point in time. And if you're looking at by property type, just to kind of show you, you'll see that our property types, you will have residential is all the way down, residential detached is 2.2% of that 1.7. So we're really not seeing much movement in distressed units as well too. So inventory is going well. And if you talking about how much our inventory is right now that we actually have in the marketplace, active listings that we have currently right now is sitting around, it's going to be, I want to say we're about 2,000, well, about 5,000, right? 5,400, want to say is where we're at right now for our market, as it actually continues to try to pull the data up. I'm sorry, it's doing it by property type, so that's why it hasn't came up yet. But we'll see here. I don't know why it's not loading it right now. But yeah, it's about 5,429 or 5,625 was the period before that. So we're at about 5,429 homes on the open market right now, okay, for us, active listing wise. So let's get back to just talking about what's going on with new listings. So new listings data, according to Housing Wire, for 2024 tells a positive story, even though it fell short of anticipated target of a seasonal weekly peak of 80,000 minimum. The new peak listing came in about 75,000 when we have a standard market year, for example, between 2013 and 2019, you saw anywhere between 80,000 to 110,000 homes on the market. Okay, so new listing data for the last few weeks nationally showed 32,000 in the same last week in 2023, 24,000 in 2022, 19,000. So we're seeing this gradually scale back up to where the market is now starting to see new homes coming on the market, often new listings coming on the market, which means that we're getting better inventory. See, what I used to say during the pandemic was you was getting the leftovers, right? That's what I called it. Now, did some people get some nice homes? Of course you did. Did you get a nice home at a nice rate? Yeah, of course you did. But then there's also like where investors were unloading properties that they had been holding on to for 10 to 15 years, didn't want to do any upkeep to it, make any repairs, deal with any contingencies, getting cash offers, and these houses was coming off the market and they was trading hands, but they was coming off the market in some of the worst condition in some of these properties that you'll see now. Now, new listings that's coming to the market now, you're still going to get a junk listing here and there, but what you would get now is, to me, better quality listings on the market that's going for peak value at this point too. So now obviously you're going to deal with price reductions. And looking at price reductions, you'll see the average year is common that about 1/3 of homes see a price cut, reflecting the usual dynamics of the housing market. Rising mortgage rates often lead to an increase in the percentage of homes reducing their price. On the flip side, when mortgage rates drop, we typically see a rise in demand, which often stabilizes or even boosts home prices, as we've recently experienced with falling rates. Okay, in the last week's price cut percentages compared to previous years, let's see how this aligns. You see, last week's was 36.4% on average, 35%, 38% in the last few years. So even the price cuts are starting to balance out a bit as well too, where they're not as fluctuating in price reductions as much, but they're still actually happening. When it comes to pending weekly sales, you're seeing weekly pending contracts, or it was at 269. According to that same week, 258, 251. So we're seeing more homes go under contract in the last week than we did previously years around this time period as well too. Now, that means that mortgage contracts they wasn't getting reported this week, but mortgage contracts are still steadily coming in on a continuous weekly basis. Now you'll see that the forecast for the mortgage rates was around 7.25 to 5.75. And the 10-year treasury yield was around 4.25 to 3.21. And we are sitting around 5.75 in certain cases as well. We got down to that level, crept back up when the Fed cut the rate, and now we're back around 6.25 to 6.75, depending on the local market that you're in and your credit worthiness, okay? So that's where we're at currently right now. With national news and in comparison to some of the things that we've seen in our local markets. We're going to get a little bit granular now when we talk about our local market going forward, because now we're going to get into some of the weeds that you care about when it comes to the Hampton Roads area. And I want to make sure that I break this down for you, because that's what I'm here for. I want you to feel comfortable enough to understand what you're doing, whether it's buying, selling, relocating, or investing, doing any of those things in our area. It's important to know what we actually have going on. And we're going to talk about a lot of those things. So we're going to switch on over to talking about what interest rates looking like right now. And let's talk about what interest rates closed out on Friday at, before we got started with tomorrow to Tuesday's rates. So you'll see mortgage rates are on 30-year fixed, 7.11%. 15-year was at 6.47. Jumbo sitting at 7.33. You got your 30-year FHA sitting at 6.45, and your 30-year VA sitting around 6.46. Okay, so That's where we're at. That's where we're at right now. And according to Mortgage Daily News, Mortgage News Daily, you'll see mortgage rates little change today, this year, and over the past 2 years. Mortgage rates didn't move much, and markets have been very quiet due to the holiday weeks. In September 2022, 30-year fixed rates crested around 7% for the first time in more than 2 decades. The following year saw rates move momentarily under 6% and over 8% before returning to the 7% by December. Surely the broadly sideways performance in 2023 meant that the corner had been turned. Okay. So you'll see how the rates have fluctuated here. And then it says, up until the past few months, 2024 indeed looked like a decisively more hopeful year. To be fair, it was still better than 2023, but ultimately just as sideways in the end, right? And you'll see that movement. We will find ourselves in the same position at the end of 2025. Well, that depends on the state of the economy and inflation. The latter is of critical importance. Until and unless inflation sustainably returns to 2% or lower, longer term rates will have a very hard time making significant progress. Even then, the U.S. will need to avoid and preferably reverse the post-pandemic trend of heavy issuance of treasuries, something that keeps the rates elevated regardless of inflation or the economy. If there's a saving grace, it's that this 3-year time frame, 2022 to 2024, now looks a lot like 1980 to 1982 in terms of the trajectory of the rates. And that was a big turning point for the only comparable episode in modern economic history. So it says 2023, 2024 actually looks like two different versions of sideways compared to 2022. So 1980 to 1982, which, I mean, that was a good time. That was a historic time as well in our market as we dealt with rates as well too. Now, I wasn't even born then, which is crazy that we're back. We're seeing that reverse role again. But what that means is that we may be on a situation, on a path to where we could see rates lower. Now, 2025, I have an economic outlook coming up for that. So this is why you need to go ahead and subscribe to our channel, because I will be doing an economic our forecast for 2025 in our Hampton Roads market. So I encourage you to go ahead and subscribe to our channel, so that way you can be and ring the notification bell, so that way you can be notified as soon as that economic forecast 2025 for Hampton Roads drops, and you can be the first to see it and understand the insights that I have for buyers, sellers, and investors, and even those that's relocated to our military area. So we'll talk about those coming up, and we'll talk about how those rates will be looking and what's my estimation on how rates will perform in 2025, which will impact how the housing market will look in Hampton Roads in 2025 as well too. Now let's go back and let's recap just what we've seen in our November market at the end of the month as we get ready to transition over to January, and then we get our December numbers here soon. So let's just look at those numbers as well. So we got median sales price at the end of November was $349,000. Settled sales 1,900 transactions. 22 days median days on market. You're getting about almost a little less than 100% of average list to sales price received at the close of a transaction. The median sold per square foot was $204, and then you had 2,300 new listings come to the market, which is down 23% year over year, or 23% compared to last month in October, and then it's up actually 5.1% year over year. And then you had active inventory was down month over month by 3.5% to 5,400 listings, and we already talked about how our monthly supply of inventory increased by 7.5% to 2.8 months of inventory. Still in a seller's market depending on the location. Now, I wanted to show you basically how that looks per city. So I'm going to show you about our major 7 cities, how that looks. So starting with Chesapeake, our monthly inventory is actually sitting around 2.7, and you actually have a higher median sales price in Chesapeake compared to the others of about $395,500. Okay, which means that the price per square foot is about $213 per square foot, with 685 active listings on the inventory right now. And then if you go, we take that one off and we go down to Hampton, one of our peninsula cities. You'll see Hampton has a median sales price of a $281,950, with actually about $183 per square foot, with 385 active inventory. Okay, with about a 2.5 months of supply of inventory available as well. So from there, we'll head on over to Newport News market. Newport News market sits around 299, and then you see on the median sales price, they're getting about 100% or a little over 100% of average list to sales price ratio received, and their median sold per square foot is 183, with about 398 homes, almost 400 homes on the market right now at the end of November, which was about that was how many months? I'm sorry, I didn't tell you how many months that was. 2.8 months. Okay, so in Norfolk, you're looking at about 310 being the median sales price, with about 23 days on market, getting a little bit less than 100% list to sale price. 201 median sold per square foot, with 647 homes active on the market, and about a 2.8 months of inventory. Okay, so then from there, our next one would be actually Portsmouth, and Portsmouth specifically has about, it's sitting at a median sales price of 249,500. Then you'll see that it's getting about 99% of average list to price received. Median per square foot is 172, and active inventory is 366 homes on the market at the end of November, with a 2.7 active inventory. Now, then our next major city is Suffolk, which is the largest city in Virginia, actually, and this median sales price is around 385,498. You're saying about 99.5% active list to price received. Median sold per square foot is about 198, and you have about 569 homes on an active inventory, and Suffolk is down 10.8% in supply of inventory to 3.6, which means that it's trending towards going into buyer market territory. Okay, so it just came off 10%, so it wasn't buyer market inventory, but now that month of supply is starting to fluctuate between being in a seller's market to almost going back into a stable market for buyers as well too. So, which is interesting to note. And then if you go down to Virginia Beach, our last one that we'll cover here, you'll see 390 is the median sales price. So Chesapeake has a higher median sales price, and then it's Virginia Beach, and then it's Suffolk, our top three markets right now. And then you'll see the 17 days on market median, and which means that Virginia is still super hot, and it's still getting close to about 100% list to sale price received. Median sold per square foot, 237. Because it's such coastal living. Coastal living is 237 per square foot in our market. And it's about 900 homes active inventory at the end of November, with about 2 months of inventory left, which is up 7.7% at the end of November. So, comment down below. What are your thoughts on actually what you've seen from our 7 cities when it comes to price sold and the active month of inventory that we actually have available throughout the 7 cities? I'm interested to know what you think about that, and I'll be down there in the comments, and we reply to every single comment. So let me know what you think about that, and how does it look in your national market if you're not if you're not actually located in the Hampton Roads market. Okay, so now I'm going to turn your attention to our hot neighborhood this week that we've seen in the last 30 days. I actually have a lot of movement going on over there. We're going to talk about our actual city of in Virginia, a neighborhood, well, not a neighborhood, well, subdivision in Virginia Beach called the North End. Okay, North End of Virginia Beach, it sits around the Atlantic Avenue, which is like our strip down of the oceanfront. That's what we call it at, the Virginia Beach oceanfront. And this is a lot of movement going on down here in this community. We actually have 45 status changes in that market, and we're looking at let's see how many we actually have broken down. 29 active listings, 5 pending, 11 solds. Okay, 11 sold. So the average home that's sold in the last 30 days on the North End is a 4-bedroom, 3-bath, 2,825 square foot home, and the average list price was about $1.5 million, and sold for about average $1.4 million. Okay, they sit on the market about average time 54 days, and we actually have 29 active listings, with the average listing being 4 bedrooms, 3 baths, 2,601 square feet, and the average list price being about $1.8 million. So I'll walk you through some of these homes that have actually come up on the market. So you can just kind of see, you have condos that's listed by LPT Realty. Then you actually have Berkshire Hathaway Town Realty actually have a condo as well. at about 449, which is a 3-bedroom, 3-bath. Then you'll see another condo here, 3-bedroom, 3-bath, listed by LPT Realty. And then you have another one, 3-bedrooms, 2.5-bath here at 749. Then you start the condo 880, condo 899, condo. Oh no, this is a detached single. Okay, so this is a good one. Detached single, 55 is it's actually listed for 910,000. And this is on the north end. Oh, I like the granite here. Great. And it's got great staging as well, too. This is what we like to talk about, too, when it comes to staging a home for photos. I love these cabinets as well, too. But staging a home for photos, it's important to actually maximize the value of the home and display the value of the home. That way, when buyers come through, they're actually seeing, the quality of the home and visualize themselves there. And it puts the home in the best condition possible to a buyer and make the buyer incentivize the buyer to actually maximize their offer because they don't want to lose out on the home. Now this is not a waterfront house, but it has a little bit of a lot as well too, which is surprising in Virginia Beach. You don't really get that much home in Virginia Beach when you're not paying that price point for it. But it's been on the market 18 days. Another condo 915. Another condo 1 million. Okay, then you got a home right there. Let's see what we got here. This is another condo 1 million, 1.1. Another condo for 1.1. Another condo 1.1. Let me take myself off the screen. Maybe you can see, or maybe I should just go on this side. How about that? Is that better? Okay, cool. So that way y'all can see. And then you have another condo 1.1. Another condo for 1.2. Another condo 1.5. The trend here is that there's not really detached homes for sale in Virginia Beach right now. This one is actually under contract, but this is a new construction, 1.9 million. Okay, so and let's see, this is actually a 4-bedroom, 3.5-bath, 3,000 square feet. Close to the water. Okay. Nice corner lot. Multi-car driveway with an attached 1-car garage. Now that's insane to me, to build a home new with a 1-car garage. But I mean, maybe you don't need, if you're gonna be walking everywhere, you don't necessarily need a 2-car garage. I like the staging. Once again, we talked about staging here. And it's actually virtually staged. See, this is actually a virtually staged image. The things that you can do with AI nowadays. Let's see. Gas range, nice. Vented, nice. Elevator. So this is actually where you can what I do like about what we've been seeing in Virginia a lot lately, and what we're seeing a lot of places as well, is that these homes are now that's been customly crafted, are considering downsizing inside the home as well too. So that way, people don't necessarily have to give up their waterfront property or their the high-end home that they have to downsize by installing an elevator, making a first floor primary, things of those natures. Those are important nowadays, and a lot of the builders in our area are doing a good job of taking that into consideration as they're building these homes as well. So because you do the Virginia Beach, being this close to the waterfront, you do have to worry about flooding. So simply just to have it to where you have to still raise the property up to a high level to where the living areas don't get truly impacted by the by flooding is ideal as well. So this is a nice loft. I like this loft with a bar area. Come with a wine cabinet already installed, or a drink fridge, however you want to look at it. Okay, and got a little lot in the back. Yeah, that is a 1.9 million there, folks. Somebody has it under contract. So then, if you get the next one, is another condo for 1.9. Is this waterfront? That one's not waterfront. Let's see if we can find you a waterfront one to take a look at. Let's see. That's 2.1 needs to be built. 2.5, not waterfront, needs to be built. 2.7, city views by the Cavalier. 2.9. Okay, this is a waterfront one. This is a waterfront condo. Okay, or has city views. So city and ocean views. Let's see what we had. Or is this built? Let's make sure it's built. Okay, so see if we can get a view of the. Yeah, that was not a good one. All right, so now that was not a good one. Let's see, is this one waterfront? Nope, not waterfront. Well, that's surprising. Is that not waterfront either? No, 4.0 views, ocean. This is oceanfront supposedly. Let's see, 4.4. Right? Is that what I said? 4.2. 4.2 million on the oceanfront. Let's see what we got here. Standard kitchen. It's the land. The price is in the land, and that's what they're accounting for. This is good. Great bones. Great bones. It needs to be updated a bit. Which I mean, that's what a purchase like this, you're definitely putting your own spin on it. But it has the rooms. It has the location to be an ideal home. 5 bedrooms, 3 baths, 2,300 square feet, right on the ocean. If you're looking at it from the map, let's look at it from the map. Yeah, see, you're right there. See, like you can't even get no closer than that. Look at that entry right down to the beach. So you can't get no closer than that, which is ideal if that's what you like. If you like the beach, this is on 83rd Street. You're right there, right there. Just gonna pull that out for you so you can see how far that is, right to the ocean. And boom, there we go. So that's our neighborhood though. So, but North End is very high end. It's nothing more than being right on the active beach, right there. And like I said, looking at what's pending, 5 sales pending, 11 sold in the last 30 days with 29 active listings on the market. I mean, these are homes that's actually moving quite well in our marketplace right now, which I mean, during the winter time, we started to see a lot of transactions in those areas because we're seeing individuals think about, what's going on for the next year, or maybe just downsizing, relocating, things of that nature happens. And we're seeing a lot of turnover in some corporate structures as well, to where these homes are now becoming available on the market. Okay. So now we're going to turn our focus to our next segment, where we focus on the questions that you like to ask us as realtors to make sure that we answer for you. Now, the way that you can field us questions to make sure that we air them and discuss them with you is by actually signing up on our newsletter. We'll leave that link down in the description below, and then you can always respond, because we send a newsletter out every week. You can respond directly to us with any questions on subject matters that you have questions and concerns about, and we send out a newsletter just keeping you informed on the Hampton Roads real estate market as a whole every single week, and we love that communication that we have with our audience over there. So if you want to get us a question, understand what we want our mentality about certain things, definitely use that link down in the description below for our weekly newsletter. Sign up over there. And we're going to turn our attention to this week's question, which is based on what do we find as the biggest challenge for sellers and buyers in our current market today. So I'm going to break this down for you. Actually, we're going to turn over to our to the iPad. We're going to break this down. I already wrote up 3 challenges for the buyers and 3 challenges for sellers. We're going to go through this completely. And what I want you to do is comment down below. What is challenges that, if you're a buyer, what challenges are you facing today that you think is important? And if you're a seller, what challenges are you worried about or concerned with today as well too, as I go through the 3 challenges that I think need to be focused on by buyers and the 3 challenges I think should be worried about with sellers. Okay, so Let's do that now. Now, the very first one that I want to go through with buyers is simply, I believe that credit preparation is important. That's the number one thing when you're a buyer, okay? So credit preparation as a buyer is super important because credit preparation equals pre-approval, okay? Now, why is that so important for me to bring up as number one? The simple fact is that there's multiple ways that you can buy a home. All right, you can buy a home using cash. You can buy a home through seller financing. If the seller owns the house, they can technically finance, the mortgage that you're going to actually have for the house because it's their property. They own it clear, free and clear, so they can turn around and put another mortgage on it for you, and you're paying them the mortgage. All right. Usually that comes with a substantial down payment, which that's going to lead into one of my other tips for biggest challenges. Then there's also securing a loan, whether you use a conventional FHA, VA, or a jumbo loan, or ARM product, adjustable rate mortgage. And I mean, you can use any other collateral as well too to purchase a home as well too. Now, to me, credit preparation matters the most because usually 9 times out of 10, most people are purchasing homes in today's society through the backing of a mortgage. Okay. Now, for a mortgage to actually be awarded to you, you have to have some type of minimum credit score. Now, lenders have things what they call overlays, where it's minimum criteria that you need to secure a loan depending on the loan product that you are using. Okay, and then they have like certain grant programs that matters in the states as well, to where the lender still works with the state to secure your grant for down payment assistance or even closing cost assistance in certain cases. And you got to have minimum credit scores to even secure some of those things too. And typically they're around 620 in the state of Virginia. Okay, so credit preparation is the matters. So knowing your credit score, knowing your debt to income ratio, being aware where if you have any collections or derogatory accounts on your account. Lenders really have a hard time awarding mortgage pre-approvals if you have late payments within the last 30 to 90 days, even over the last year. So you want to be very mindful of what your credit profile really looks like. I know some people may say, that might be what do they like to call it, like one of those things that's used to minimize the impact that people can really make in the economy. But realistically, I just view it as, if you make the money but you haven't been good at paying your debts, why would someone give you a lot more money to not pay them back either? So I mean, it's a give and take. I understand it. Okay, so but that's number one. Number two, to me, let's head back on over to the iPad. I believe in, you need to know your needs, minimize wants. Okay, so and why I think this is important to talk about is because as a buyer, this is how I like to typically run through, basically showing homes to buyers and educating buyers in the buying process and making sure they're making an informed decision and not really missing out on the opportunity in the marketplace. Okay, and what I mean by that is, like, we'll tour home, and I always ask at the end of the tour, Mr. and Mrs. Buyer, on a scale to 1 to 10, what do you rank separately this home as? 1 being the least, 10 being the unlimited budget. The reason why I say 10 is an unlimited budget is because if you won the lottery tomorrow, you had the last person that won the lottery won like $1.2 billion. If you had $1.2 billion and you showed up to buy this house, and if the house did not exceed $1.2 billion, but it had everything that you wanted in it, how much would you pay for it, and would this be the house? I think that's what a 10 is. I don't think a lot of people are sitting on 10 money, okay? I think there is opportunity for those in the marketplace to purchase 10s, but most times out of 10, they're not a 10. 9s are like that cusp right below 10, and that cusp right below 10 still puts you almost in a category where you're in undefined territory. Most of the times I find buyers are extremely satisfied with a property that's ranked 6 to 8. Now, typically the sweet spot is 7, but I usually see a 6. I can see a 8, and that usually what the market dictates at that point in time when they're purchasing. So usually when I find a buyer who's between 6 and 8, they've already assessed and understand these are the minimum needs that I needed to take care of, which could be in a situation 3 bedrooms, 2.5 baths, 1,800 square feet. Okay. And it's in a neighborhood. I feel safe in this neighborhood, and the school zone is not the worst. It's like a 7, it's an 8, it's a 9, it's a 10. Depends on the marketplace. Okay, and typically that's what the buyer is usually assessing. So I call those needs. The bedrooms, the baths, the square footage, the location of the neighborhood. And if you have a family that have young kids, the school zone probably matters a lot too. Is it close to your church that you go to? Is it in an ideal community that you feel meets the needs that you have, like whether it's close to the beach in proximity, close to parks in proximity, close to your job in proximity. Those things are needs. Wants, jetted tub, open layouts, gas stove range, things like that matter, but there are wants. And so I always try to make sure people understand, maximize the needs that you have in the house, because you can always use money to change the wants. You're right. So that's basically how I look at it. Now, I'm not telling people to spend more money after they purchase a house, but I do think that matters enough to where you should have that conversation and understand as a buyer what the expectation should be for your upcoming purchase. That's just something that I always take into consideration, and it's something to be mindful of. Okay. Now, heading over to number 3. Number 3 is start saving. Now, and this is important. Okay, we talk about this a lot in our society, where a lot of times we're not doing a great job of educating the youth and educating our children and educating our peers on the importance of saving immediately, because we're doing a pretty bad job about that. Now, the main thing is when it comes to purchasing the home, there's associated costs with purchasing a home. Okay, to me, you got to know that the associated cost is going to be there. If there's associated costs, then you got to know what that cost looks like, as I'm writing this out for you on my iPad. So I think that you got to know what your costs are when it comes down to it. And I think that's important. Like, we have things that you have to pay for as a buyer when you're trying to purchase a home, and those associated costs really matter. Like, you just not going to show up and purchase a home because you got a loan. You still have costs to get that loan secured. Okay. And that's important to know. And a lot of times I think that buyers are getting the information from, their peers, their family, things of that nature. Depends on when these people bought houses. The markets have changed so drastically from the 80s, the 90s, hell, the 50s to 60s to the 2000s to the 2020s, that you are in a total different marketplace than we were before. Okay. So I like to always educate buyers on what do you think the associated cost that comes with purchasing a home. And I think starting to save now is important to do. Matter of fact, I think we almost need to do how much, what do I need to bring to the table as a buyer? What's the cost associated with being a buyer? Video. And if that is something that you think that we need to do, definitely leave me a comment down below and just use the words buyer video, so I know that's a video that y'all cared for us to actually, curate, so that way we can talk about associated costs and things that you should be aware of as you decide to purchase a home. Okay, so let's get into it a little bit, because I'm going to bring up on a separate sheet of paper the associated costs here. So in Virginia Beach, right, we looked at it earlier that in Vi Beach, that median sales price is basically $400,000. Okay, so $400,000 is the associated purchase price. Now, I always recommend that every buyer gets a home inspection. Now, you can do what's important to you, and if you feel like your home inspection is not, I will always defer that you should do one. But if you decide that it's a thing that you need to do in negotiations where you don't have to do a home inspection to get the house, I understand that. But I always recommend you get one. That's my stance. So A home inspection in Virginia typically costs about $500. Okay. Then for you to actually, if you're using a loan, for you to actually get the property, okay, the property, the purchase under a mortgage, the lender is going to appraise the property. And you as the buyer, unless you negotiated in the contract, but unless you as the buyer, you're going to have to pay for that appraisal. And that appraisal typically in Virginia runs about, on average, $600. Okay. Now, we do have a thing in Virginia as well called earnest money deposit. It's basically the reassurance to the seller that you as the buyer are going to take care of your inspections and your contingency period. You're going to keep on working with your lender to get your loan secured. It's the money that you put up to say, hey, I'm going to continue to do these things to perform in buying your house. It's not due diligence money. Like in North Carolina and other states, there has a thing called due diligence. North Carolina, Chicago, Illinois, things of that nature. They have a thing called due diligence where you basically put this money up to, and it's passed over to the seller and it's non-recoupable. In Virginia, the earnest money is what you put up to say, hey, Mrs. or Mrs. Seller, thank you for taking your property off the market currently for me to do my inspections and to continue the process with my lender to get through underwriting to secure the loan to purchase your home. And when I do get to the point of making to the closing table, my earnest money deposit will be applied to my associated closing cost fees, okay? Or refunded directly back to me if I decide that in my contingency periods, I do not want this house, okay? That's how that works. So, but let's say, usually at a minimum, we see about $500 in EMD. Now, this can vary, and it is a variable, okay? It can be higher in a lot of cases, okay? A lot of these fees are variables based on your lender, your home inspector, whatever you got, your associated costs that you have, okay? Now, also, typically what I've been seeing lately in the market for a buyer is that closing costs are somewhere between 3.2 to 4% of the purchase price, okay? Of the agreed upon purchase price. So in a $400,000 home, 3.2 is like 12,008, I think. Let me just pull up my calculator, okay? So if we do 400,000 times 0.032, okay, so that is, can you see that? 12,800, okay? So anywhere between 12,800 to $16,000 in closing cost fees, okay? And basically, let's just add up these fees first. So you got $1,600 in fees, $1,600. Closing cost fees, anywhere between 12,800 to 16,000. Okay. So your total out-of-pocket cost as a buyer could be 12,800 plus 1,600 is 14,400 to 16,000 plus 16,000 plus 1,600, 17,000, anywhere between $14,400 to $17,600, give or take. Okay, that could be your total out-of-pocket expense. So that leads me back to why I say save now. Okay, start saving now. This is, to me, important enough for you to realize that. The more you save, the better it puts you in position, in my opinion, as a buyer to negotiate. Because there are situations where you can negotiate with the seller to help cover some of your closing costs or some of your other associated fees, things of that nature. But the more you have in your own savings, the more you're in the driver's seats in negotiations with purchase price, what you need from out of the seller, from like a repair standpoint, things of that nature. So the better off you are saving your own money, or even just changing things in the house that you can actually purchase. Sometimes that's even more important. So having that money liquid to where you can do those things are important in my eyes. So those are the top three things. So let's recap buyers' biggest challenges in my mind. Credit preparation, because that's going to equal to your pre-approval. Know your needs and maximize and minimize your wants. I'm sorry, I don't know why I was about to say that backwards. Minimize your wants, and then start saving now. Okay, those are the three things that I think are buyer bigger challenges. Now, if you are a buyer in today's market and you're purchasing within the next 3 to 12 months, what do you find as a bigger challenge? Comment those down below. Okay, I want to know what your biggest challenge is right now. And let's talk about sellers now. Okay, so let's change the focus here. Now, so this means I have to put on my listing agent ball cap. I help buyers, I help sellers, I help relocators, I help investors. I love helping military personnel who are relocating to the area PCS and in or out, because I know how difficult it was in my 21-year military career and doing it twice out of Virginia. But let's talk about sellers for a second, because that is a different animal and a different perspective than someone trying to purchase someone's home. Okay, you're trying to get your home on the market, prepared the right way, presented the right way, and sold in a timely manner to maximize the money that you want out of your home. Okay, I understand that. I've sold a house, I bought 2 houses, I get it. And this is one of those things where I want to make sure we talk about this, because these challenges are unique to each individual seller. Okay, so, and the things that I talked about with the buyers are unique too, and so they vary from person to person for sure, and from client to client. But realistically, let's talk about sellers in this position. Okay, so my first one that I will say is a bigger challenge is being aware of competition. Okay, here's why. We've already talked about this earlier in the video, in our newscast segment, where active listings are more on the market now. We're seeing more inventory, more months of inventory in play. And when you're seeing more months of inventory in play, that means you as a seller, more than likely, when you list your house on the market, if you're the first one listed on the market in your neighborhood, that doesn't mean that you're going to be the only one listed on your neighborhood. Now, there is some premier neighborhoods that have very little turnover, but for the most part, you pop up on the market, someone else is going to pop up on the market. So you have the best position your home to be aware of the competition, knowing that competition is around, whether that's a quarter of a mile away from your neighborhood or up to a mile away from your neighborhood. If y'all in the same price points, same features in bedrooms, baths, square footage, there's going to be depicting features in your home that we have to sell to the buyer to make it where your home should be more desired than the competition. So this is why I think it's important to always work with an agent who is classified in your area as the residential expert and has the post of the market, and be able to communicate these things with you clearly and make you self-aware of those things. But you as a seller, I do believe that there is, a little bit of responsibility to understand that you're not in 2020 anymore. You're not in 2022. You're not in 2008. You're not in 1984. You're now. You're living in the now, and the marketplace has adjusted and changed in your marketplace regardless of where you live. Okay, and that's important to note now, and that's why I think that we need to start the conversation with sellers is that, yes, I believe that your house is beautiful, Mr. and Mrs. Seller. I think that your house should get paid top dollar to you for you to be taken off the market by another buyer. But your neighbor down here, Billy Bob Sue, has decided that they want their house gone immediately, and they're positioning it that way. So you're going to have to require patience. We're going to have to be very unique in our unique selling proposition, and we're going to have to do the things to beat the competition and bring in the most buyers. Okay, so that's why I started with that. Now, number 2. Okay, let me move back over here. Number 2 is going to be, all right, controversial. Maybe we'll do a whole nother video on this: staging or no staging. That is the question. play on Shakespeare there. Okay, so let's talk about why that is number 2, because staging is an associated cost. somebody has to pay it. Like no one is really showing up to your home, presenting staging, and it doesn't come at a cost. Now there are agents who, it depends on what marketplace that you live in, who will, say they are going to do staging for you, but realistically, that's part of their unique selling proposition to get your listing, and that's not a problem as well either. I understand that. If that's something that you are aware of, we have resources for staging. We have a staging guide as well too. Maybe we'll link that down in the show notes. So we don't link it in this show note. We may make a video. So let's do this. Like we did with the buyer video. If for the seller side, if you're interested in us, doing a video tailored to that unique selling proposition of staging versus no staging, leave us a comment down below saying staging wanted. Okay, the key word staging wanted. All right, and we will look at the feedback, and then we'll determine on how we'll handle bringing that video to you and when we'll bring that video to you. So staging versus no staging. Now here's the real thing about that. There's unique stats out there that tells you that your home sell for more over list price when they're staged. There's a unique stat out there that say if you don't stage your house, this is what you're going to make over the asking price. There's how many days are you on market when there is staging versus how long you're on market without staging. There's unique data points that can make staging sound great, and there's unique data points that can make not staging sound like it's not that big of a deal. So it just depends on your market. I think there's some custom things that we can determine here to make it where it makes sense to stage or where it doesn't make sense to stage. The first one is, does your market dictate better results from staging? Okay, how do you do that? So for me, when I'm going on a listing consult with my sellers, I come in and I say, hey, look, let's talk about staging versus no staging. I see you have some nice, unique pieces here, or do you need to get out of this house immediately, move somewhere else, and we still need to sell this house, and you're taking all the furniture with you? 9 times out of 10, that's the case. Other times is that we can use the furniture to position it the way that it is and minimize the rest of the furniture and get it out of the house. But let's say that they're clearing everything out and we need to bring staging in. What I like to do with the seller is make them self-aware of, like I said, about the competition, but then also what staging can do to your home versus not do to your home, okay? Because that's going to be depicted, in my opinion, by your marketplace. But what I do is I pull up an MLS. I go say, all right, Mr. and Mrs. Seller, we're going to pull up the last 6 months of homes that sold in your neighborhood that look similar to yours or have most of the same unique features that your home has, okay? And then we go down the list and in that price point, and we look, okay, does this house sold for in 5 days? Did it have staging or no staging? And it sold for over asking. Okay, what about the next one? Did this house have staging? It's set on the market about 15 days, but it still got an over asking offer that they accepted. What about this house? Oh, it had no staging, but it came underneath the market, and it sat on the market about 30 days. Or what about this one? This one was on the market, no staging, been on the market 10 days, and it looked like it got asking price. So those things matter to me, and I think those should matter to the seller. And I think as a good agent, you want to bring that information directly to the seller, because at the end of the day, it's your home as a seller. I want to help you facilitate the deal that's going to make sense for you and get you to maximize the most dollars out of your home and get you the best equity position out of your home. And to do that, I think you need to make an informed decision, and you need to have that information at your disposal in making that decision. And then, also minimizing the cost of the staging. You can do a soft staging, you can do a light staging, and then you can do a full-blown staging, okay? There's 3 different categories typically, and they have packages for that, and we talk about those and see what we can get away with. And I leave staging to those who are professionals at staging. As your agent, I know what look good in images. I know what look good in listing photos. We're not going to put out listing photos that's not going to work. So to me, staging versus no staging depicts who you as the seller, what you want, and it does, your market dictates it, okay? And then here's the other thing with staging and versus no staging. One of the things that you need to kind of consider as well too is if your equity position allows for you to even want to do that, because sometimes staging can range from $3,000 to $7,000 in costs associated to the seller. And now you can usually pay that out at closing. You don't have to pay it up front typically. Now some staging companies may want you to pay it up front, or at least put a deposit down for holding their furniture that long. But typically you can pay it at closing, and then that just come out of the proceeds that you have at closing. And if you have enough equity position, that may make sense for you. If you don't, then the margins may be very slim, and you may not be able to pull that off. And then we have to get unique in the things that we do. But have I sold homes without staging? Yes. Have I sold them over asking price? Yes. Have I sold them under asking price? Most of my houses come in at 100% or more, but I'm pretty sure there's been a time or two where it may have come underneath the asking price. But also staging, yes. Has it come in at the asking price? Yes. Above asking price? Yes. Below asking price? Yes. And I think the only time it has underneath asking price is because it didn't appraise for what the amount was that was agreed upon in the purchase price. But either way, at the end of the day, there's variables that goes into play, and all of them are not just apples to apples or oranges to oranges. You have to play this thing out and understand and be aware of what you're getting yourself into. Okay, so that's that one. So let's head back. Number 3. Okay, one more time. I keep on jumping to the wrong side, wrong button. All right, number 3 is going to be remove emotion. Now, this one is difficult because I understand and I sympathize with homeowners, because typically you've made so many memories in this home. Now, if you're an investor, that's different. But as a homeowner, you have made so many memories in this home, whether you watch all your kids grow up in it, whether it was the first house that you built from the ground up, whether it was, the home that your parents or your grandparents built with their bare hands and now you're selling it, or it was being passed down from generation to generation into the homes, into your hands, and now you're like, hey, let's move on from it. Or you could be liquidating the assets to maximize your retirement portfolio going in the future. It's so many different dynamics that can go on with a home that I understand why it can be an emotional process to sell a home. But when you actually decide that you're putting that for sale sign in your yard, we have to remove the emotion out of the process. And I know I'm asking a lot saying that, but this is my 3 big challenges that I think sellers face. And I do think that you have to make a business decision when it comes to your home. And 9 times out of 10, the goal is 10 out of 10, the goal is always to maximize the equity in your home and get you the most money that you can for your home. But also 9 times out of 10, sometimes you may not get to that level. You may get close to it, but you may not get all the way there. And if you don't get all the way there, then we got to start kind of understanding, Mr. and Mrs. Seller, what do you want to do? Because to me, at the end of the day, it's your home. No one has to force you to sell your home. If you want to accept the offer, and it's the right offer, you're going to accept it. If it's the wrong offer, we're going to say no. We're going to continue to wait and push this thing out. But a lot of times, a lot of sellers are unaware that, or agents don't want to communicate with their sellers, that sometimes the first offer is the best offer if you're not going to become in a multiple offer situation. Now, if you're in a multiple offer situation, that's totally different. We're going to start seeing, we're going to be able to dictate pretty much what you're going to walk away with at that point. And what you're going to do as a seller. So I do think that, there's some emotion to it. There's things that you got to be aware of. And I just think it's one of those things that we can do a better job of communicating the expectation that you should maybe want to remove a little bit of emotion. Because it may come down to, you may need to paint. You may need to do a repair. You may need to do something prior to just putting the house on the market. Or it may come out the buyer did a home inspection. It may be something totally wrong with the house that you didn't know because you were just unaware of it. And it's not a big deal, but I can understand why you could feel like it's a big deal. So it's just one of those unique challenges that we face. And I do think in the marketplace, we need to be more aware of it. Okay, so let's recap just those 3 big challenges for a seller. Being aware of competition, staging or no staging, and remove emotion. Okay, we already talked about the buyer side. That's the seller side. Once again, if you want us to make a staging versus no staging video, definitely leave us with the keyword down there, and we will produce that video if there's enough demand for that video. Okay, so I just want to make sure that I bring up what's the expectations for this podcast going forward. Okay, We're going to produce shows for you Monday through Friday. We're going to be on here somewhere between 45 to an hour long episode each week, each daily, each week, because what we want to do is we want to showcase what Hampton Roads has to provide, keep you up to date on what's going on. We're not going to weigh you down in statistics, but we definitely want to make sure you have the flow of what's going on in the pulse of the market. So we definitely will talk about those things, but we will talk about important news, things that you need to be aware of as well too, whether that's national, regional, or local. And what we're going to do is actually bring in updates from the market videos that we've already done. If you're not aware, we've done property tours on this channel as well too, or neighborhood tours, where we've been through a lot of the neighborhoods, and we're going to do more of those. But we're going to update you on the ones that we have done for 2024 statistics, because a lot of movement have happened in those neighborhoods. There's a lot of things that has transpired, and we want to communicate what we have seen, what we've evaluated, and what the data says about those neighborhoods, because some of you are thinking about relocating there from other cities. Some of you are already living in those neighborhoods, and some of you are considering buying in those neighborhoods. So I think all that's important as well too. And we also want input from y'all, feedback from you as the viewer on what things do you want to see, what questions do you have, what things can we answer for you. So always leave comments on every one of the videos that we're going to do, because we are taking that information in and we're catering this information directly right back to you based on what you like. Okay, so go ahead and like this video if you found value in it. Go ahead and subscribe to the channel, and definitely ring the notification bell, so every time we drop a video each day, Monday through Friday, you're the first to know and getting the information from your #1 real estate source in the Hampton Roads area. I'm your host, Craig Houston, with the Moving to Norfolk team. I'll catch you in the next video. Y'all stay safe. Peace.